When well-known investors make moves in the stock market, it frequently attracts the attention of both experienced investors and others who are just starting out in the market. These investors, who are frequently referred to as super investors, have established a reputation for themselves as a result of their excellent track records and their capacity to recognize attractive investment possibilities. When the news comes that these super investors have purchased particular stocks, it can be interpreted as a sign of confidence in the future prospects of those companies, and it may also prompt other investors to take notice about the situation. The purpose of this video is to investigate the significance of the stock acquisitions made by super investors, to look into some recent examples of stocks that have captured the interest of these investors, and to analyze the potential ramifications for the market as a whole. A better understanding of super investors. Who just are they? Individuals or institutions who have a demonstrated history of successful investment over an extended period of time are often considered to be extremely successful investors. These investors typically have a profound understanding of the financial markets, industries, and individual businesses, which enables them to recognize possibilities that are either undervalued or neglected, yet have the potential to experience considerable growth. Among the most well-known super investors are individuals such as Warren Buffett, Carl Icahn, George Soros, and Ray Dalio, amongst others. These investors have made fortunes by adopting a variety of investment tactics, which include value investing, activism, and macroeconomic analysis, among others. There are several characteristics that are shared by all investors, like discipline, patience, and a focus on the long term, despite the fact that every investor has their own method. What makes the stock purchases of super investors important? There is the potential for the market as a whole to be significantly impacted by the actions of super investors when they purchase or sell equities. These investors are frequently seen to be bellwethers of market sentiment, and the actions that they take have the potential to affect other market participants, such as individual investors, institutional investors, and analysts. Purchasing stock by super investors is significant for a number of reasons, one of which is that it demonstrates trust in the future prospects of the firms in which they have invested. The fact that these investors are prepared to commit capital to a specific stock can be regarded as a vote of confidence in the business model, management team, and development prospects of the firm in question. Typically, these investors perform significant due research before making investment decisions. Additionally, the acquisitions of stocks by super investors can draw the attention of other investors, which can result in an increase in the amount of interest in purchasing the stock and perhaps drive up the price of the company. This phenomenon, which is referred to as the halo effect, develops when investors imitate the actions of super investors in the expectation of attaining returns that are comparable to those of the super investors. As a consequence of this, the buying of stocks by exceptionally wealthy investors can have a domino effect throughout the market, affecting both sentiment and trading activity. Examples of stocks that super investors have purchased in recent times. Over the course of the past several months, a number of equities have garnered the interest of super investors, which has resulted in speculation and conversations among market participants. One company that stands out as an example is Tesla, which is a manufacturer of electric vehicles and has been a favorite of investors like Elon Musk and Cathie Wood. Tesla continues to attract investment from super investors who believe in the company's long-term growth prospects and significant potential for disruption in the automotive sector. This is despite the fact that Tesla's performance has been unpredictable. One further illustration of this is Alphabet Incorporated, which is the parent company of Google and has been a popular choice among investors who are looking to gain exposure to the technology industry. In order to bet on Alphabet's supremacy in high-growth areas such as internet advertising, cloud computing, and other fields, super investors such as Warren Buffett's Berkshire Hathaway have amassed huge interests in the company. Other stocks that have attracted the interest of super investors include Amazon, Microsoft, and Nvidia. These companies are all leaders in their respective industries and have provided investors with outstanding returns throughout the course of their investment careers. Due to the fact that these stocks have good fundamentals, innovative business models, and the opportunity to profit on long-term trends like as e-commerce, cloud computing, and artificial intelligence, they are preferred by super investors. The consequences for the more comprehensive market. It is possible for the stock purchases made by super investors to have far-reaching ramifications for the market as a whole, influencing mood, values, and investment patterns. When extremely wealthy investors direct their funds into particular stocks or industries, it can be an indication of a change in the dynamics of the market and lead to heightened volatility as investors respond to the reports. Consider the following scenario: a super investor decides to purchase a significant amount of a particular stock. In such a scenario, it has the potential to draw the attention of additional investors who view the investment as a validation of the opportunity that the company presents. It is possible that this increased buying interest may cause the stock price to rise, which will result in a positive feedback loop that is referred to as the virtuous cycle. On the other hand, if a super investor decides to sell a stock or reduce their stake, This might result in selling pressure from other investors, which in turn can cause the stock price to fall. This occurrence, which is referred to as the domino effect, takes place when other investors follow suit and sell their shares in response to the news, which results in a cascading effect on the price of the company. Regardless of the circumstances, the actions of super investors have the potential to affect the sentiment of the market and contribute to variations in stock prices over the short term. Long-term investors should avoid making investment decisions based entirely on the behavior of super investors and instead concentrate on the fundamentals of the firms in which they invest. While these swings may create chances for short-term traders, long-term investors should focus on the fundamentals of the companies in which they invest. In conclusion, the stock purchases made by super investors can have substantial repercussions for the market as a whole, affecting a variety of factors including sentiment, valuations, and investing trends. The purchase of stocks by super investors might be interpreted as a sign of confidence in the future prospects of the companies in question, which in turn can draw the attention of other investors. Before making decisions about their investments based entirely on the behavior of super investors, however, investors should take prudence and conduct their own research. Investors are able to navigate the market with confidence and accomplish their financial objectives if they retain a long-term view and concentrate on the fundamentals that lie behind the companies in which they invest. The investment world considers these investors to be thought leaders since they frequently have a sizable following and are considered to be influential. As a consequence of this, their commentary, insights, and investing theses have the potential to mold the sentiment of the market and impact the behavior of investors. For instance, when a super investor makes public their reasoning behind investing in a specific stock or industry, it has the potential to generate a great deal of interest and controversy among investors. It is possible that this will result in a rise in the amount of study and analysis conducted on the fundamentals of the company, as well as conversations regarding the broader ramifications for the market. In addition, the strategies employed by super investors have the potential to operate as a gauge of the sentiment of the market and the confidence of investors. The fact that super investors continue to make big investments and are bullish on the market is something that may be viewed as a positive indicator for the general health of the economy and the stock market. On the other hand, if super investors start selling off their investments or become more cautious, this may be an indication that there are potential headwinds or worries on the horizon. From the study of the behavior of great investors, one of the most important things that can be learned is the significance of completing exhaustive research and exercising due diligence prior to making judgments on investments. Although it may be tempting to just follow the lead of these investors and imitate their stock purchases, individual investors need to understand the reasoning behind these choices and determine whether or not they correspond with their own investment goals and the amount of risk they are willing to take. Moreover, investors ought to be aware of the constraints that come with mindlessly following the recommendations of super investors. Although these investors have achieved extraordinary success in their professions, it is important to note that they are not infallible. The judgments they make regarding their investments are susceptible to the same challenges and dangers that are faced by any other investor. Consequently, it is essential for investors to keep their portfolios diversified, refrain from making hasty choices based on the short-term moves of the market, and consistently retain their concentration on their long-term investment goals. Share your views with us in the comments. If you're new to our channel, then do subscribe to us. Thanks for watching.